Hi, Brock VandenBerg, president of TaliMar Financial. It is Friday afternoon, about 5 o'clock. I wanted to connect with a lot of you that are emailing in regarding the mortgage fund. It appears that a lot of people are taking their chips out of the stock market right now, a little concerned about the market volatility, and they are looking to shift those funds into either trust deeds or the mortgage fund. So I wanted to cover a couple questions that are commonly asked when people are talking to me about the mortgage fund or trust deeds. So the first question is, where can you view all the loans in the mortgage fund? That's simple. We go ahead and list all the loans that we invest that are in the mortgage fund by simply going to the investor portal. Now, the investor portal is an online portal that all our investors can go to view our available trust deeds, to view their current portfolio of trust deeds, and then also view information on the mortgage fund. So go ahead, just go to our website at TaliMarFinancial.com and select Investor Portal under Investing. Now go ahead and log out here. This is the portal. If you've forgotten your username and password, you can always select Get Your Username or Password. If you have not signed up for the fund or for the portal, go ahead and select Not Registered and go ahead and set up yourself a user account. All right, so I'm going to go ahead and sign in. And the first thing you're going to jump to is the dashboard, and it's going to list all the accounts in your name. And then if you are currently invested in any trust deeds, going to go ahead and show those trust deeds here. This shows right here is the mortgage fund, and it shows all the loans that were funded in the mortgage fund. Here on the trust deed portfolio, this will break down all the loans that you're currently invested in from a trust deed standpoint. Under available trust deeds, this will list all the loans that we currently have available to invest in. Here on the mortgage fund, which I think a lot of people have questions about, you can view all the specs on the mortgage fund. So simply just select mortgage fund and go to your account information. This is going to show page 1 how much you have invested in the fund. So I personally have a little over $268,000 invested in the fund. You can go to the portfolio overview, and this is going to give you a breakdown of the entire loan portfolio of the fund. So if you go under portfolio overview widget, you'll see that there's 31 loans in the fund with a total outstanding balance of $15.6 million. The average yield of the fund is a little over 8% right now. Now keep in mind, that's the gross yield. It doesn't include the fund fees. Fund fees are roughly about 0.75 of a point right now. And so if last month, the fund returned a little over 7.25%, but the trailing 12-month average is around a little under 7.5%. I anticipate that return to the investor should increase next month as the accounting costs for the prior year get absorbed into the fund, and then also we start to see an increase in just rates generally to loans that we close. Average loan to value ratios at 62.14%. Our target is to keep that at 65% or below, and the average term of the loan is 14 months. Right now, I'm trying to keep that term between 12 and 18 months. I think it's a good amount of time, number one, to have the money outstanding, so we're not churning through loans too quickly, but we're not taking interest rate risk by going beyond 18 months. I think that's probably a smart option right now, especially with rate volatility. Here under the widget of loan type, we break down all the types of loans that we fund. Bridge loans make up almost 50% of the fund. 20% are fix and flip loans. 23% are fix and hold loans. And then roughly 6% are construction loans. We don't really get into ground up construction. This is actually an existing structure where they're adding a full ADU on the back. Now, people ask commonly, well, Brock, what's the difference between a bridge loan and a fix and flip loan? Well, the biggest difference between a bridge loan and fix and flip loan is in a bridge loan, the borrower isn't updating or adding value to the property. So we're just underwriting to current value, and the borrower at the end of the day isn't putting any money into updating the value of the property. On the fix and flip and fix and hold, on the other hand, the borrower's intention is to update the property. And so if it's a house, they may be going in and updating the kitchen and bathrooms, adding new flooring, paint, what have you. And in the case of a fix and flip loan, they'll go ahead, their exit strategy is to physically sell the property. In a fix and hold, they're going to fix it, rehab it. They'll bring a tenant in, and then they'll refinance the property with more conventional financing. And then obviously construction loan speaks for itself. Mostly I term construction as ground up construction. So starting from nothing. In this case, there is an existing house. They're just building behind it. Property type. We're going to be really focused early on in the mortgage fund with SFR, single family 1 to 4 units. As you can tell, we're about 90% of the fund is SFR. The rest are small balance commercial, industrial, and then land. We're really not going to be doing land in the fund unless it's a real infill site and it's fully graded with utilities to the parcel. So we're not going to have much exposure to land. Jump over to the counties. It breaks down where we're lending. You're going to again see overwhelmingly in San Diego. It's our backyard. I anticipate we could get this fund over $100 million and still be focused in San Diego. That's how big of a market San Diego is. Also, loan sizes are just larger here. We're focused on funding in larger markets like San Diego, Orange County, LA, San Francisco, where loan sizes are just bigger. It's easier to manage a portfolio of larger loans than it is a bunch of small loans, such as like in the Midwest or something. Ownership type breaks down whole interest or fractional interest. We prefer to own the whole loan in the fund. I think we have 2 legacy loans. That's when the fund was much smaller, and we wanted to not take too much risk on any one loan, so we fractionalized ownership interest in it. And these loans will probably burn off here in the next current quarter. So we'll just be 100% whole interest in loans. On the next tab is your loan schedule. So we list out all the loans in the portfolio. So you can view every single loan in the portfolio and get comfortable with it. I know a common question is, Brock, I want to see the underlying information on the loan. We don't offer that online. And the reason being is this is an open platform, and I don't want people to come in and start picking off the loans. So going in, finding who the borrower is, finding out or what property it is, and then trying to refinance our own loans. I'm not saying that you're going to do that. I just want to keep that out of the public eye. If you're interested in learning more about a specific loan, feel free to reach out to me, and I'll give you all the details of the loan if you want to go down specifically on an individual loan. So that's the great function. You can log in, and all this information is available to you. I'm excited to present it to you, especially with the growth of the fund now, especially with the market in the turmoil it is, a lot of instability in the stock market. You've seen a lot of money coming back right into the trust deed and mortgage fund space. If you're interested in learning more about the fund, you can always give me or Sarah a call. We'd be more than happy to talk to you about it. Or you can go ahead and access the executive summary simply by selecting TaliMar Income, going to the website at TaliMarFinancial.com. Go under Investing to TaliMar Income Fund, select that page, and you can request information right here. Go ahead and input your first name, your email, answer these questions. One thing to keep in mind, you have to be an accredited investor. An accredited investor is somebody who has a net worth exclusive of their primary residence of at least $1 million, or have had annual income individually of $250,000 over the last 2 years, or $300,000 included with the spouse. Let me go over a couple of common questions that I do get about the mortgage fund. So the first is about the 12-month lockup period. We have waived the 12-month lockup period. So technically, if you want to invest day one and you say day two, this is not for me, Brock, give me my money back, we'll go ahead and start the withdrawal process. So there's no lockup period. Second, what is the withdrawal process? It's simple. You just go ahead and notify us that you're looking to withdraw a certain amount of funds or your entire investment, and we'll go ahead and process that withdrawal. Now, something to keep in mind, the withdrawals occur, the physical withdrawal will occur when there's a liquidity event in the fund. What is a liquidity event? Liquidity event is number one, if there is a payoff in the portfolio. So once the proceeds of the payoff come in, we'll go ahead and disperse that out to the investors in the fund, or you have new investor capital come in, and that investor capital then replaces the investor capital that's going out. So it's not a matter of, hey, Brock, I want to withdraw my funds day 2. I'm going to get them day 3. We have technically up to 90 days to get those funds back to you. I think we've done 2 withdrawals thus far, and I think we did it within 48 hours, though. So it's a pretty quick process. Number 3 is, what is QBIT? Okay, quick QBIT. It's called Qualified Business and Income Tax Deduction. It's a tax law that was put in place during the 2017 Jobs Act and Tax Cut Act. And what it states is that if you invest in a pass-through entity, the distributions from a pass-through entity are taxed at the income generated from that is taxed at 80% of the income generated. The remaining 20% is not taxable. Now, this is available. You need to talk to your CPA if you can take advantage of QBIT, but it is a great feature to have so that when compared with investing in individual trust deeds, it's a tax savings and a better option for people that are worried about taxes when compared with individual trust deed investments. Let's see. The fourth question that I am getting is, what are the risks involved? Obviously, the risk involved, you are investing in a portfolio of loans. And the risk being is that if that portfolio of loans, the borrower stopped making payments, the distributions from the mortgage fund obviously would decrease. The distributions are based on the borrowers making payments. It's essentially the same risk that you're having as individual trust deeds. So if you're invested in an individual trust deed and that borrower stops making a payment, your income generated from that trust deed will stop. The benefit, though, on the mortgage fund is that not all the trustees stop making payments simultaneously. Maybe a couple will, but you're still earning income on the trustees that continue to pay. And then the last question I get is, can I invest a little today? Yes, that's we have a $50,000 minimum investment. Can I invest more at a later date? And the answer is yes, you can invest more at a later date in increments of $1,000. And that also goes into one question I did forget here is, when are distributions? Distributions happen every month, right around the 15th. I think we've been a couple days after the 15th. And you have the option of either taking a direct distribution and having that ACH'd into your account, or having those funds reinvested into the mortgage fund. So if you're interested in learning more about the mortgage fund, give us a call or go ahead and go to the website and take a look at our executive summary. Be more than happy to walk you through kind of the ins and outs and how it works. If you're currently invested in the fund and you want to invest more, just simply go under investing and go into the Get Started tab and go ahead and put your information in and tell me about how much. Just let us know how much you're looking to increase your investment by, and we'll go ahead and get your subscription agreement processed immediately. Thanks for listening. Have a great weekend, and looking forward to next week and getting some new loans. Talk to you soon.